Hello Trade Pros, this is Victor from Trade Pro Academy, and today we've got a special video for you. We're going to be talking about volume and the importance of volume in trading, using volume in trading and Sierra charts as well. So let's get started with today's lesson on volume. How we like to use volume and how volume could be the single indicator that you may use to turn your trading profitable. That may be just the one tool you need. Volume can be used in many different ways, including volume profiles and just general volume looking at trends. So we're going to be looking at a few things today. First, we're going to start off with a little definition. What is volume? The volume is the measure of how many times a security or financial asset has been traded in a specific period of time. So this is a daily chart. Each one of these candles is represented by a volume stick down below down here, so that is how much volume has been traded. Now you can see there's a moving average as well, so what we do consider a higher volume may exceed the moving average, such as in these two areas that I just circled. Now it can be measured in shares for the case of Apple that we have on our screen right here. Apple trades in shares, or it can be even measured in contracts for options and also futures. So it's a specific number of shares or contracts sold in a specific period of time. For futures, we may look at the daily or Globex period of time to see how many contracts have traded on the ES or how many contracts have traded in a single footprint candle. Now, I bet you guys have heard that volume usually leads price. Am I right? Can I assume that? Does volume lead price? Well, in a sense, yes and no. What if I told you that all you needed was a chart and one study to be a successful trader and to trade these markets successfully? Now, would you think I'm crazy? Well, volume may just be that tool. So you'd be interested in learning more about volume, right? So volume is such a powerful tool that all you need is just this one tool to trade this market successfully. And what we're going to do today is just lay out how we can find the end of trends or the continuation of trends with volume. Now, we were talking about how volume can be seen in many different ways. So down here is just general volume. We've also got volume profiles. Now to the side here, we've got a volume profile. So this just measures the volume traded at a certain level and how much volume was traded at that level. And in combination with the volume down here, we could create a very, very strong trading strategy along with price action. And of course, we'll introduce you to order flow when we do look at futures. We've got a lot of futures order flow videos on our YouTube page, so go check them out. Now, we did talk about volume leading price. So is that true? Does volume indicate where price is going to go? Well, to a certain extent. I would like to think that volume kind of confirms price more than it leads it. So it confirms the trend and confirms the price action rather than leading it completely. You could make the case that it does lead it. So considering on a trend move, if we have lower volume, we could potentially see a reversal to the upside. Now, some may consider that leading it, or you can look at it in the other way that it confirms the trend. So considering this downtrend right now, and if volume is dropping, then that does not confirm this downtrend, and we could look for a level of support for a rebound higher, and then we look into our volume profiles. Where is an area of attraction? Now we have a great video on volume profiles. I'm sure you've heard of it. Go and check it out. It's a great tutorial on how we like to use volume profiles to trade. So why do we consider volume to be confirmation? It's because price would need a lot of buyer or seller control to move it in one direction or another. So that's how price action generally forms. So that's why maybe many people could consider it to lead price. So if there are more buyers than sellers, you would expect price to go up. If there are more sellers than buyers, then price would drop. Now, volume is just a reflection of what goes on in that market. So how many contracts are traded, how many shares are traded, and the price itself is a reflection of who takes control. If there are more buyers than sellers, then we could consider a move higher. Here on TradingView, however, this is just general volume, even though there green candle, red candle, green candle, red candle just tells you how much volume was traded in total. So when trades exchange hands, there must be a buyer and a seller to those shares. Now, if volume begins to fizzle out in one direction or the other, so if we're in a bull move and volume starts to decline, then we can confirm that that trend may no longer be valid and that sellers may be taking control. And then to the turn, if we start to see a spike in volume, we could confirm that the downtrend is a go. So we'll look at that in a little more detail on Apple and a few more examples. I just wanted to talk to you about one more thing before we jump into that. So what instruments can volume be used on? Now, volume can be used on every single instrument except for just the one. Can you guys guess what that one instrument is? Which instrument does not have a regulated central exchange? If you guys said Forex, then you are correct. Forex is an unregulated market without a central exchange, unlike all the others. So that means on the spot Forex market, there's no central exchange that shows you all the volume that was traded. However, through your brokerage, you may see how many contracts and what volume and how many dollars or euros, however, whatever currency denomination you're in, have been traded just through that brokerage. It won't tell you how much has been traded throughout the whole world, which can be kind of dicey since you don't have all the data. Now, Forex brokers, again, do provide that data, but again, since it's not centralized, you're kind of just left with a little amount out of the potential trillions of dollars that were traded. Now, the stock market and the futures market do have a centralized exchange. So if you want to see how many shares traded on a certain stock on the NYSE, you can just simply Google it and you will see. It's pretty transparent, and that's what we like about it. On the other hand, with futures, you've got data going through the CME, and your broker will provide you that data, how many contracts have traded at certain levels on the order book, on level 2 trading, and on the heat map, and also on the footprint, which we're going to talk about a little later. If you want more information on the footprint, we've got more videos. However, the CME and the NYSE do confirm shares exchanged and contracts traded. So with the exclusion of Forex, that means that you guys can trade any other instrument based on its volume. Now, what if I told you there was a way to trade FX with volume? But how could that be? It's not centralized, unregulated. Well, if you combine Forex with futures and you look at the Forex future market based on the US dollar, you could trade Forex futures with volume and with order flow. Smaller market, but again, very profitable and it responds to price action well and news as well. And since it's centralized and regulated, it is a little less jumpy. There is still some slippage, but maybe not to a wide extent and difference in spreads such as the normal spot market might be. One alternative is Forex futures. The other alternative is through the CME's newest, most successful product, and that is the micro. So the equity micro. Now, Forex also has micros, but again, they'll be a little less liquid and there'll be a little more slippage on them. However, with the new micro contract, you could trade the ES futures, NASDAQ futures, Dow futures, and Russell futures all on the micro, which give you kind of the same feeling as Forex in terms of needing a smaller account. However, you can access the futures equity market, which is very, very liquid. And all of these micros have proven to be liquid with over 10 million contracts traded so far. Again, they were released early May, so that is expected, but it is the most successful product the CME has ever launched. Now, we've got a lot of micro videos, so I go and urge you to check those out. So we've talked a lot about them. So if you guys would like to know a little more about FX futures, let us know. And this is a way to trade a decently liquid Forex market through different time zones, of course, with a centralized brokerage and exchange. Now we're going to head into a few examples here. The main one on the screen is already set up to go, Apple. So Apple in a huge uptrend, we're just going to analyze volume here and also the volume profile based on this time frame from about October until now. So you can see right here, this was the bottom printed late 2018. Everyone knows about that dump. And to the downside here, leading the way, look at all this volume to the downside. Volume is increasing as price drops. Through support level, huge volume on the break lower, comes back into the resistance from the breakdown, lower volume, swing lower, huge volume. So that's generally how volume works. What you're looking for is a continuation of a trend. Of course, you'll need other price action analysis if you're setting support levels, resistance levels. This is a great little price action trade. So what you're looking for is the break of the level, then the continuation back up, the pullback into the resistance, a few rotations on weaker volume on the pullback, and then right here, a few rotations on an intraday chart, weak volume, And then to the downside, once you get into that short trade, you want to see the large volume come in. If there was weak downside volume on this move lower, we could have expected a rebound somewhere where support would be, so into this area. Alternatively, you have your earnings reports here, so I'd suggest keeping out of these. These, you'll notice they're high volume events. That is because a lot of shares exchange hands due to this report. There's a lot of uncertainty behind it, and there's a lot of volatility, and a beat or miss in earnings can change an investor's viewpoint on the stock drastically. So are they making money? Are they losing money? Are they increasing revenue as they should be? Are they beating expectations? So on, which will cause large spikes in volume. Now, to the uptrend again, you want to see increasing volume right here, a spike in volume, some earnings, flatlined as did volume. When you see ranges like this, you are expected to see flatter volume, but a break to one side or the other should come with big volume, otherwise we may continue back into that range. This right here was not the case. We broke up. You can see a spike in volume continues higher. Right here, a little scare. You got a spike in volume, but the flat line again as we continue to higher, which may have indicated that this top may be a little overbought. Now there was a spike in volume here. You might say, oh my God, volume went up. Well, you can see based on the moving average, we went down until this earnings report, which spiked here. Nothing really happened, and then we got a slip below the support. Volume came into the downside. Now, how much lower could we go? We're starting to see a little fizzle out in volume. We start to see spikes in volume, continuation lower. We could see a move lower. However, if we start to turn back into the support area, into this volume profile attraction on increasing volume, we could see a momentum shift higher, guys. So, moral of the story is watch volume on these swings. Also consider price action. That is not the forgotten tool here. Now, I want to jump into some equity futures as well. How do we use volume in the futures market? Very, very similarly, but we could add a portion of level 2 and order flow. Let's go ahead and take a look at that. Now the chart you see in front of me here is the ES. We've got the volume profiles on the side here, the 1-day and the 5-day right here. If you guys want to learn more about these and how we use these, just drop a comment down below and we'll talk about those. So this is the ES futures market on a 5-tick right here. And what we are looking for is just general price action. How is price reacting to levels? And how is volume at those levels? So we're mixing it with order flow here. This is just the inventory bookmap, the level 2 trading overlaid on the chart. So these are areas of attraction. Large offers are red, large bids are blue. Now what we want to see here is first the confirmation of the trend. The confirmation of the trend led by price action along with these offers attracting price lower. These act as magnets for price. So this is where you could consider volume or inventory rather a magnet for price, leading price higher. So if they continue higher, if offers move higher, that means higher interest to sell at higher levels. Alternatively, if the bids move higher along with them, that just means buyers are trying to get more aggressive into the price. So using just basic price action here, we've got a really strong resistance level that's formed a few peaks. And what we're looking for is a break of this resistance level. And is this break going to happen on high volume? You can see throughout this section right here, low volume. And then once this break does happen, you can see volume start to increase. That means the uptrend has been confirmed so far. You can see order flow confirms it as well to the upside. It is moving along. Now, what you're looking for is the first rebound or the second rebound and rotations for the upside. Now, order flow right here can confirm that. So if offers begin to drop, that means more sell interest more aggressively to the downside until they stop and stall and then the bids take them up again. Now we come back into this area. This little trend right here, the downtrend, does it come in on large volume? No. That means we can confirm that this is still a pretty strong bull, right? So what you're looking for is the broken high retest on a price action basis for a continuation. Now, does this upside come with a lot of volume? Generally, yes. Compared to this little drop here on low volume, we do see a little more volume come into this upside. Swing lower again into a previous high, broken high. Does this come large volume to this downside swing? Kind of. You could maybe make the case right here. These bids do support, so that kind of confirms the uptrend. Now, right here, this uptrend, does it come on strong volume? Not really, which kind of prompts this sell-off. Does the sell-off come on strong volume? Not really either. So we begin the range. The range usually occurs on smaller volume, and then right here into the close, you see this huge pop. volume right away, the volume resistance point you can consider starts to increase drastically, confirms the trend higher. What you're looking for is a retest into a next level based on volume profiles, could be around these 04s for continuation even higher. So what we've drawn here, really strong support to the downside, happens to be the overnight low right where it opened into the Globex session. This is the area we're watching for. You want to see a drop into this area on very, very weak volume with rotations for the continuation higher back into these 13s. Now there's a lot of volume traded here based on the daily volume profile, so it's going to be a huge, huge level of support to the downside. What you want to see on the drop, again, decreasing volume spike to the upside. We could also look at the footprint to confirm volume on futures. This is order flow trading. You want to see more buyers than sellers on the way up. So let's see if we can see that on the ES footprint. Using the footprint here, what we're looking at is just volume traded contract, number of contracts traded per tick on the ES futures again. So this is the actual number of contracts on the bid side and the offer side traded at that same level. Now, Mark made a great video about this. If you want a lot more information, go check it out. Just the general idea is to the upside, you want to see the buyers in terms of buying balances and high volume nodes towards the bottom of the green candles or towards the bottom of the red candles. Just high volume nodes towards the bottom of candles support price and incrementally move up as order flow continues, as inventory continues to increase on the offer side. Now right here, you got some sell pressure with these sell imbalances, but you also got high volume node, a lot of contracts trade near the bottom of this candle, which holds as support. Now this next candle whiffs up, a lot of buyers come in, absorb that price. A little iffy here, however, they do manage to keep control of this support area that they just cracked above. You can see the high volume node shaping up towards the bottom of these candles and buyers absorbing all this sell pressure. And then towards the end, all the selling is absorbed completely, run higher, eat up the offers sitting above, then continuation with buyers continuing to hold control. Now let's see what happened next. Now you can see buyers holding towards the bottom of this range. They're coming, trying to absorb all these sellers. They absorb them each time through. It's getting a little bit choppier here. However, 1, 2, 3, 4, 5, 6, 7 candles for a move higher. All green candles, just all buyer absorption, eating up the offers to the upside. Some sellers trying to press it lower here. Buyers come in, continue to press it higher. If you want a little more information on that footprint, go and check out Mark's video. Otherwise, check us out at TradeProAcademy.com. You'll learn all of this and more in a vibrant community of order flow traders. We trade volume as it happens and the interest of the sellers and buyers, which is the influence of price moving up or down. We get to see that live in the markets every day when you join our trading room in the mornings, Monday through Friday. So this was Victoria on how you use volume to trade any market except for the spot forex market. Remember why, guys. Hope you guys enjoy this video. Like this video, subscribe to TPA, and ring that little bell to notify you when we do go live every morning for our morning market update. Take care.